My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to save you the money. My job is not just to entertain, but to put things in context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right, we got two markets right now. One is all about momentum. The other is all about old-fashioned growth. Momentum is nasty right now. Classic growth, well, it is cruising.
House of pleasure.
Regardless of the fundamentals. These cross currents are not readily apparent when you look at the average. Dow tumbling 749 points, S&P plunging 1.71%, NASDAQ, geez, plummeting 2.2%. Now, if you own too much momentum, you are gasping for air. The oxygen has been turned off for you. If you own the old tried and true secular growth plays and are diversified, I'm talking about the Johnson & Johnson, the Coca-Colas, your portfolio is actually doing pretty well. First time those stocks have worked in ages. So we got to figure out, will this chasm heal or will it grow ever wider? And for that, you know what we have to do? We have to turn to our game plan for next week, which has an important mixture of corporate earnings and economic news. Now, Monday starts with Domino's Pizza, DPC, which could give us real insight into the possible weakening of the consumer. By the way, that's the proximate cause of today's hideous market. Right after the election, consumers experienced a surprising level of euphoria, but that seems to have dissipated. Now, I got to ask you something. Is it happening all over economic levels? Is it just rich? Is it the poor? Is it the middle? Is it temporary? Why don't we listen to Russell Weiner? He's the CEO of Domino's. He's a straight shooter. He's going to give us some real insight. After the close, we get results from Coterra Energy. That's one of the best oil and gas companies, which is why we own it for the Travel Trust. With natural gas back up to $4, more on that later when we interview the CEO of EQT, the big natural gas company, I think the future looks bright for this group. We also hear from one of my favorite real estate investment trusts. I know, boring. You know what? I like making money. It's never boring. Realty Income, letter O. I'm partial to this one because it pays a monthly dividend, which just got boosted earlier this week. I also care about Cleveland Cliffs, so when it reports, as this steel company has been beaten up by cheap exports from China via Mexico, transshipment they call it. I worry about how it's doing and whether the U.S. can actually stop these darn subsidized transshipped imports. Finally, I have to tell you, there's one stock that's become a true battleground here, and I don't mean Palantir. I'm talking about a stock called Hims & Hers Health. That's an online healthcare company that currently offers a less expensive alternative to the GLP-1 weight loss drugs, as long as they're relatively unavailable. Now, today, the FDA said that Novo Nordisk GLP-1 formulation is no longer in short supply, which could mean that the compounding pharmacies that are making similar versions of the drug have to stop. Now, Hims & Hers has said it can still make the cheaper version some way, but the market seems skeptical. Hence, the stock's astounding 26% collapse today. But then again, it's still up more than 100% year to date. So profit-taking, I don't know, makes sense to me. Tuesday morning's big. All right. We own Home Depot for the Travel Trust, and we want to build a large position ahead of eventual rate cuts. And as I said yesterday on our monthly conference call, we expect a soft quarter because of weak housing. But the company will benefit from the need to rebuild after major storms both in the Southeast and the fires in Los Angeles. Now, next there's Planet Fitness. This is one, it's a puzzle. It's a puzzle. Many stocks are puzzles. I think young people are more health conscious these days. They're trying to stay in shape, avoid unhealthy foods, and, of course, beverages like liquor. Will Planet Fitness verify that thesis? I bet they do. How about a sleeper stock? One that's withstood the selling. Sempra. Sempra's a growth utility with a decent yield and a lot of opportunity. CEO Jeff Martin, guessed many times, can show you that his stock offered a better return than most of the traditional growth names. You know, when this might be worth buying on weakness, I'm debating to put it in the Travel Trust. After the close, we hear from Workday. That's an enterprise software company that got downgraded this week because of the possibility of softer sales. The enterprise software group is really at the heart of this market's weakness. If the sales are soft, I expect much more downside. Now, have you seen the action in Cava of late? This once beloved restaurant stock, although a still beloved chain, has plummeted. And it's not because of the last quarter, which was stellar. I bet they reported another set of great numbers. But when Wall Street has turned against momentum stocks, it doesn't matter how well your business is doing. File Cava away if the quarter's great. We're circling back at lower levels. Wednesday, new home sales. Oh, boy. This group has really just taken a licking. You know, it's basically a jailbreak of selling caused by a combination of bad weather and, more important, high mortgage rates. It's crushing the home builders. We need a pickup to verify that housing isn't just falling off a cliff at this point. I'm actually not hopeful. The incredibly reliable Toll Brothers called the spring selling season mixed. That's not what we want to hear. We also hear from Lowe's, which is always a horse race with Home Depot, but has been a standout performer for years. Its stock never soars. It just quietly goes higher. I love that. After the close, we get some fireworks. There's Salesforce. Oh, boy, which is thought to be doing very well, but don't tell that to the shareholders who have been shellacked in a battle wave of selling. This is a richly valued momentum stock, although a stock, by the way, like ServiceNow, is much more expensive. Then there's Snowflake, the rent-the-cloud play that's become far more than that. Really, it's a real advisor to those who want to learn more about how to use artificial intelligence in the business. And then there's the most important company report this week, if not this year, okay? NVIDIA. We had many reports offering forecasts of how the $3 trillion AI and accelerated computing company might be doing. They all came out today. They were all positive. All I can tell you is that we had a huge sell-off in the semis today, and the chief index off 3%. That's not a good sign for NVIDIA, which got decked, and it fell a sickening 4%. I say on it, don't trade it. But our strength may be tested by the possibility of a slow ramp in its Blackwell platform launch. New iterations of NVIDIA's chips have always been questioned for their worth. I bet CEO Jensen Huang offers a clear path for those who want to join the new industrial revolution that he's helped create. Oh, I hope it matters. Thursday starts with the gross domestic product read, and I think it will be strong as part of a business euphoria we got after the election, when the consensus quickly built that President Trump would be much better for business than his Democratic predecessor. Today, we saw interest rates fall. That's a pattern we had all week, which suggests that this GDP reading might be the last strong one. Again, that's not what I say. It's just what I'm looking at. That's what the market's telling me. In this tougher environment, the cruise stocks, well, they've held up relatively well. Can Norwegian Cruise keep its winning streak going? Not clear. We got a couple of key momentum stocks reporting. Vistra, that's a power producer with nuclear exposure, making it a favorite stock among people who want to bet on the data center-driven electricity shortage. I saw GE Vernova get trashed as part of the anti-momentum trade today. Maybe a positive reaction to Vistra could signal that the selling's over. I don't want to hold my breath. After the close, Dell Technologies reports. This one's crucial. Its stock was clocked last time, and I think it could make a comeback, given that it helps companies adopt NVIDIA's AI platform. Great company with a terrific CEO, Michael Dell. I don't believe it'll miss twice in a row. That last quarter I didn't like. Finally, Friday, we get the personal consumption expenditure number. Now, this is the Fed favorite inflation gauge. We saw real strength in bonds this week, which produces lower interest rates. Maybe it's because of the slackening of inflation. That would be good. Or maybe it's because the economy is cooling. Not so hot and definitely bad for earnings. The PCE reading, it could be dispositive here. So let me give you the bottom line. Out of nowhere, the momentum stocks had a hideous downturn today. It's hurt many aggressive growth investors. Can this pullback finally run its course? I hope so. If not, my prediction, more of
the House of Pain.
Rose in Pennsylvania. Rose.
Yeah, hi, Jim. I like your opinion. Like to buy some of the trade desk after its recent pullback, but I would like your advice as to what's a good entry point price-wise, and also if you saw any reason why I should not do that.
Okay, yeah, I did actually. I didn't like the quarter. Why didn't I like the quarter? Because Jeff told me that he was Jeff Green, the CEO. In the conference call, he said, look, he's disappointed in himself, and it wasn't clear how much things have really changed and whether things are going to get better after one quarter. I think we now have to wait another quarter. I really do, Rose. I want to see the next quarter. I don't like to buy after the first big quarter. Maybe there's a second, because it sure didn't seem like the quarter went out very well. And you know I like the company. Let's go to Chuck in North Carolina. Chuck.
Booyah, Jim, from Wonderland, Durham, North Carolina.
One of my favorite cities. I'm not kidding. Like it. I like Raleigh, too, just for the, don't want to anger those people. Sure.
Thanks for taking my call tonight.
Sure.
I recently made an investment in a company we've talked about before, heard you mention a lot. Today, a week later, it closed 50% above my purchase price. I was thinking of taking a little bit off the table. The stock is SMCI. I'd like to know what you think about Super Microcomputer.
I think you should absolutely take a little bit off the table. It's had an incredible run. It's a parabolic move. We know that we're going to hear from NVIDIA. That's going to knock down or take it up. Why don't you make a little, let's make some real money. You know what I really do? I'll tell you, if I were you, I would take out my cost basis, and then I'd play with the house's money. Greg in Maryland. Greg.
Big booyah from Maryland, Jim. Thank you for everything you do, and happy belated birthday.
Oh, thank you. You're very kind. Let's go to work.
Let's go to work. I want to get your opinion on Devon Energy, DV.
Devon has run too much. I got to tell you, I watched it go up. We saw the quarter. It's terrific. We got Cotero on Monday. That's great. And if EQT comes down, I like that too better than Devon. Devon is not my stock of choice at this time. Now, the downturn in momentum stocks has hurt a lot of aggressive growth shareholders. If it doesn't run its course soon, well, guess where we're going to be?
The House of Pain.
Mad Money tonight. With drops in the temperature outside, could natural gas prices keep heading higher? I've got EQT's top brass to break down the recent natural gas rally. I like that one more than Devon. Then, is the growth on the menu for Texas Roadhouse after yesterday's earnings report? I actually liked it, but I'm going to talk about inflation and more with the CEO. And I'm helping you navigate this market's volatility as I answer some of our Investing Club members' burning questions. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.